Good day, everyone. Thank you for joining us once again here at Seaford and Brew for our economic briefing. I am Jamie Sumner, and for this week's briefing, we want to review over the Fed statement that just came out, as well as look at some inflation numbers that came out over the past week. So this just hot off the presses here, the Fed's release, their statement, and it says overall that the labor market continues to strengthen. We've seen that in the unemployment numbers that have coming out, where we have the overall level of unemployment continue to be below 4% at that 3.8% rate. And then the economic activity continues to rise at a solid rate. And we see that primarily in those business investments. Also, in the household spending has picked up a little bit, and we'll know a little more about that tomorrow when we see the retail sales number come out. But overall, as I said before, business fixed investments has been growing strongly over the past quarter. We'll continue to look at those numbers in terms of those inventories as well as construction spending. Overall, the Fed sees that the risk of the economic outlook appear roughly balanced, and therefore they have increased that Fed funds rate by 25 basis points to that range of 1.75 to 2%. So here we are at that 25 basis point push-up, which is what we anticipated. Now we flip over and we look at the projections, and we can see overall GDP growth was improved. They went from a 2.7 to a 2.8 here in 2018, and then 19 and 20 they continue to remain where they were at 2.4 and 2% respectively, showing that continued trail off in the overall growth rate. Bigger number here would be the fact that they have incorporated another rate hike this year. So over and beyond the three, they're looking at four rate hikes in 2018. So we look at that. There was some speculation that that was in fact going to happen. And indeed, we see that in the dot plot, that additional rate hike. When we're looking at inflation, we can see they're at that 2.1 all across the board for the next 3 years, showing that continual increase in their inflation expectation and the overall inflation rate up beyond their 2% target. And we see the core PCE at 2% for 2018 is what they're projecting, and then 2.1 for 2019 and 20. So overall, we see that inflation continue to increase in terms of their projections. When we look at the actual inflation numbers that have come out, we see a similar occurrence here for that the producer price index, that PPI. We can see that the final demand up for the month 0.5%, which beat that consensus of 0.3. So we had faster growth there. A lot of that, though, in terms of the energy. When we look at less food and energy, we can see that number was actually 0.1% on that month-over-month growth rate, and we see that's just under that consensus of 0.2%. We can see where those come in terms of the month-over-month. When we look at year-over-year, overall PPI came in at 3.1%, above the prior at 2.6. That 2.6 was a little lower when we look at the history here, but that's where it came in at, maybe contributing to some of that growth overall for that 3.1%. Less food and energy came in at 2.6. So when we look at the PPI not showing a tremendous amount of growth, just this continued modest growth rate in inflation. The consumer price index, we can see, came in at expectations for the month over month in May, 0.2%, same what it was in April, and year over year at that 2.8%. So again, both meeting expectations on the overall CPI. Looking at less food and energy, we can see we came in at 0.2%, and that matched that expectations in that core at 0.2, and then the 2.2 for year over year growth, again matching expectations. So no real push up in that growth rate. Continue to see this modest growth in inflation, nothing that's getting too far ahead of us. But we continue to see the Fed projecting out more inflation in the future, us getting up to that target of 2%. Interesting, when we look historically at the CPI, we can see here we are right above that 2% rate going back into history. When we look at history here, you can see we're still pretty far below historical average when we push back, especially getting back before the 2000s into the 1990s and 1980s, where we had much higher level of inflation in terms of CPI. So we're still in this period where we're growing modestly in terms of that consumer price index. Well, that's what we have for you this week. We look forward to talking to you again. Have a great week, everyone.